Hello and welcome to the Daily Blitz. In today's video, we'd like to investigate how central banks have changed their strategy from one of defensive reaction to preemptive strike. Now, Nikolai, the European Central Bank appears to have started this strategy first, right? Could you summarize what they've been up to?
Yeah, so the latest policy change is to have an open-ended QE, which means there's no sort of final endpoint that they're going to finish, and it's at a rate of 20 billion a month, 20 billion euros a month.
So it's the QE will continue until morale improves.
Yeah, that's what I call it.
As we'd like to put it. And the Federal Reserve, meanwhile, has done something similar, though it's not technically QE. So while it's not quantitative easing, it is still an expansion of their balance sheet in order to supply short-term liquidity into the banking system. So while it may not be the same in terms of buying bonds and holding them on the balance sheet, they are still supplying short-term loans into the banking system, collateralized with those bonds. But on aggregate, if you zoom out, the balance sheet is still expanding, and so the money supply is still expanding. So effectively, this may not be called QE, but it is overtly an increase of the money supply, which is what everyone thought was so unconventional when they first started doing QE in the first place. But what does this reveal on sort of the broader macro landscape as to what the strategy of the central banks is? Because as far as I know, there hasn't been a bank failure, right? There is not, inflation is not, deflation has not arrived. We're not seeing a massive broad debt deflation and lots of defaults. We're not seeing unemployment in the US, certainly, though maybe different in the euro, but we're not seeing unemployment suddenly spike up in the US. Why is it that this has changed?
Right, nothing's gone wrong, and yet they're sort of pursuing QE at the same time as well, which is unusual in and of itself. So why are they doing that? What's changed? And the way we see things is that they're undergoing a change in overall strategy, and they're pursuing a preemptive strike. They're trying to prevent things from going wrong before they even do, and they see their QE as the policy tool that's going to do that. And that radically changes how investment markets are going to react. And I think it radically changes how investment performance will adjust for this new policy.
So instead of a shot in the dark at a hope of avoiding the next recession, it's a bit more like a barrage in the dark, right? It's like an artillery strike in the dark. In terms of how investors should take this on, though, do you think this is a QE forever? Just get used to it, even if it's not called QE?
Yeah, so I think people need to look at what's been happening the last few years of QE and no QE, and sort of tell those two time periods apart, and adjust your investment portfolio for that, because we're going to be going through a period of QE infinity and continuously for the next few years.
Well, I think that sums that up. Thank you very much for watching the Daily Blitz. I hope you enjoyed it.